We've got a great show lined up for you here on Retiring Well. We're going to be talking about unclaimed retirement benefits. Is there money out there that you're missing out on? Is 2023 tax preparation tips. What is a deferred annuity? Have you considered that as part of your overall retirement plan? And lastly, how to prepare for a recession. These are all great topics that you're going to want to stay tuned, coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Hey, welcome to this segment on unclaimed retirement benefits. First thing I'd like to explain is what is an unclaimed retirement benefit. That could be an old 401k, that could be an old pension that you've earned over your lifetime but either forgot about or life happened and maybe your beneficiaries didn't even know that you had earned that. I want to put up a screen here of some pretty shocking statistics. The average worker in America right now will have 12.7 jobs over their lifetime. It's interesting that half of those jobs are earned between ages 18 and 24. But in May of 2023, there was 29.2 million lost retirement accounts. They had total assets in those accounts of 1.65 trillion. There were 72,000 eligible Americans for pensions that are currently not gathering those payments. Pretty shocking, I think, and you say, how could that happen? Well, let me just give you an example of my wife and I. My wife and I were both teachers. I taught high school math, personal finance, calculus, algebra 2 for 17 years. My wife taught special ed for 16 years. And through those years of service, we earned pensions, and we also opened up some 403Bs and 457s. Now, since we've retired, our pension equation is such that you can't actually get our pension, we can't start our personal pensions here until we get to the age 60. And so that means we might have 20 years of life happening before we can ever turn those on. And if you're not organized or you don't let your beneficiaries know what you've earned, you could see how easily those might get lost or forgotten about. When I explain to my wife our financial situation and try to teach her some things, she'll look at the income plan or all the different planning resources that we have here at Centennial, and she'll just be like, okay, that's enough. I'm not really interested. Are we going to be able to retire? I hope so, yeah. But what goes into that retirement plan are these accounts. And you can see how easily they could either be lost or forgotten, or life happens and you want to know what to do and how to claim them. Okay, so here's some strategies. The first thing is that contact your old employer. Okay, get to the HR and just say, hey, do we have any kind of statements, pay stubs, old literature on these accounts, whether it's a 403B or a 457 or a 401k, and just see if you can get a contact number that you can then reach out and then see what kind of benefits might still be lost there. The next thing is that you can just have your own documents. We have clients come in all the time, and they'll have a box of stuff, and they'll just be like, okay, here's my stuff, but I need to find some of these old things. I don't know where to look, and even if I found it, I'm not even sure what I'm looking at, and then I wouldn't know what to do afterwards. And so we say, okay, no problem. Let's just start looking through all those old statements and trying to go down memory lane there of what employment did you have, and what might you have earned, but as just sitting there, because in the transition of jobs, there's a lot that's going on. Life can happen fast, and these are those things that can be forgotten about. Now, there's some really helpful online tools. And so if you're sitting there wondering, I wonder if I have an old pension, or I wonder if, my old 401k or 403b, how can I might find that? If you look at this graphic here on the screen, you'll notice there's two really helpful websites to give you a start. There's many out there, but the National Registry of Unclaimed Retirement Benefits, and the Pension Benefit Guarantee Corporation are two websites that you might start that search. Okay, it's a national registry that will have that information that you might be able to uncover some old assets that you didn't even know you had. Or maybe you're of age now and you can turn on those benefits. Similar to my pension. Once I get 60, if I'm still kicking, I'm going to be turning that on because that's going to be my best option forward. What happens if your company went out of business? Okay, well, this is where those statements and contacting your employer and contacting the new company that might have bought it could be very helpful. And then finally, work with a financial advisor. You know, we do this stuff all the time. We know the questions to ask and we know what we're looking at when we look at those statements. So if you have a trusted financial advisor, I would highly suggest put it on their lap, work together as a team to try to uncover these hard-earned benefits. Thank you so much for watching. I hope that added value to your life. Hi, my name is Jack Klunder, and I am a financial advisor with Centennial Wealth Advisory. I work out of our Cadillac office, and we specialize in retirement planning. We take a very holistic approach. We can help go through all the different aspects of planning that are involved in retiring well. So if you are nearing or in retirement and you have questions that you want to go over, please give the number on the screen a call, and we can have and set up a free, no obligation consultation.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
It may be hard to believe, but tax preparation season is not too far off. And so I want to walk through just some general ideas for you to be considering when it comes to preparing your 2023 tax return. So everybody, as we can all probably agree, wants to keep as much money in their pockets as possible. So let's dive in here. First, starting with your standard deduction. So per the IRS, this is a predetermined amount that reduces your taxable income. And based on your filing status, including your age, potentially visual impairment, and if you're dependent on someone else's return, those are all different factors that come into play. And just looking at 2023, and as an example, if you earned $50,000 and you're a single filing status, then the standard deduction is $13,850. So that means then you take your $50,000, you take away your standard deduction, puts you at a taxable income of $36,150. Meanwhile, the 2023 standard deduction for married filing jointly is $27,700. Now, if you're age 65 or older, you can add $1,850 for either single individuals or heads of households, and married individuals can add $1,500 per qualifying person to their standard deduction. And according to TurboTax, approximately 90% of taxpayers claim the standard deduction. But the 2017 Tax Cuts and Jobs Act nearly doubled the standard deduction for all filing classes, reducing a number of the itemized filers. So itemizing factors that you may consider: mortgage interest, different points, mortgage insurance premiums, and then along with different taxes that you might pay: real estate, state taxes, local income taxes, sales tax, personal property tax, and then there's charitable donations. If you're doing that, you want to keep good records if you believe you're going to be able to itemize your taxes. There's also out-of-pocket medical expenses. Now you can only deduct costs that exceed 7.5% of your adjusted gross income for 2023. And there's a handful of miscellaneous expenses that aren't as common, but you may want to look into that if you think that you might qualify to be able to itemize your deductions. The key point that I bring up here is how important tax preparation and also how important tax planning can be. So as you approach the end of any tax year, you want to be looking at what's different this year in comparison to last year, and are there different ways that you could either reduce your taxation today or look at, should you, so at certain times it may make sense to accelerate the amount of tax that you pay today in order to provide a better tax situation down the road. A prime example of that is looking at Roth conversions. You might have money in a traditional IRA today, and who knows, maybe you find yourself in a situation where, okay, your tax situation's a little bit lower today, and so it might make sense to look at, does it make sense to take some money from the taxable IRA, pay some tax on that today, but now you've shifted those dollars over into a tax-free Roth IRA where the future growth, future distributions would be tax-free. So again, this is something that not everyone is prepared to do that, and it usually, we encourage you to talk to a qualified professional. That's something here at Centennial Wealth Advisory. We have a tax team that specifically looks at not just trying to keep your taxes as low as possible this year, but what does that look like over the next 10, 20, 30 years, and how can you best keep the most amount of money in your pocket, either for you or for your family, versus paying Uncle Sam more than necessary. So again, if you find yourself and you're not quite sure where you are or what your long-term plan is from a tax perspective, we encourage you to give us a call, or you're always welcome to check out our YouTube /Retiring Well channel, where you can like, share, subscribe to that, and get lots more information about how to plan to retire well. There's a retirement crisis because many people aren't well informed and well prepared. Information and proper planning are key for the success for your retirement. You need to be cognitive of your particular situation and how you can best plan to retire well. Our team has prepared several videos that are based on whether you're single, married, retired, still working, and there's no cost, no obligation to access these customized videos. You can visit sen-wealth.com to access the videos. Our goal is to inform and to educate. Our hope is to provide you with tools that help you plan to retire well. We hope you will find the content valuable and pose some questions you may not have considered, including income. There's a variety of ways to structure an income plan, but it depends on your goals. Investments, be aware of the risk. You need to consider your capacity for risk, attitude, and need to take risk. Taxes, you can't solely rely on your tax preparer. Retirement tax planning is a whole other animal. Estate, you don't need to be afraid of preparing for the inevitable. Insurance, we believe health insurance is more important to your retirement plan than ever before. If you have additional questions or are interested in a personal meeting, the initial consultation is complimentary. We can assure you we'll never pressure anyone to become a client. We encourage you to visit cen-wealth.com to access these videos. Our hope is that you take advantage of this opportunity to further your knowledge and improve your confidence in your existing retirement plan or help you along that path. Again, we encourage you to go out there, take advantage of this opportunity, as our goal is to help you plan to retire well.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, and to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
What is a deferred annuity? I know a lot of times when people hear the word annuity, they get a bad taste in their mouth and they kind of check out a little bit. But take a sip of water or coffee or whatever you got with you there and don't check out. Stay with me, because annuities can play a very integral role in your retirement plan. And I think the bad rap that annuities get is really based on the fact that a lot of people just don't understand them. So today let's talk about the different types of annuities and what that deferred annuity really is. So essentially, there's 4 different types of annuities that are out there. You've got an immediate annuity. That's number 1, okay? And how they work is, well, basically, you give the insurance company a lump sum of money, and then immediately they pay you an income stream for the rest of your life. And you can structure that however you want. Now, this would not be deferred because you're not deferring that income, right? It's an immediate annuity. So that wouldn't fall into that deferred annuity that we're talking about here today. But that is one type of annuity product. Another type is the fixed annuity. So this is very similar to a CD, but it's held at an insurance company. And typically what's going to happen with this type of product is you're going to give the insurance company a lump sum of money. They're going to guarantee you a specific rate of return over a certain period of time. For example, right now in 2023, we can get you a 3-year fixed annuity that's paying 5.5%. Now, this would be what's considered a deferred annuity, because you're putting money into that insurance product, you're deferring income or taking money from that product for a period of time. Okay, so that's one type of deferred annuity. Next one, it's called a fixed indexed annuity. This one's a little bit more complicated than that fixed annuity, but it's still a type of deferred annuity. And how they operate is they're tied to an indice. So you put your money with this insurance company, and your returns are based on how a certain index performs over a certain period of time. Most popular one right now is a fixed index annuity that's tracking the S&P 500. And so really the most simplest way how it works is you're going to get participation on the upside of the index. So if the S&P finishes up 20% over a year, you're going to get a portion of that, but you typically don't get all of it. And then on the downside, you have protection there, because let's say the S&P was down 20%. Well, you're not going to feel that 20% down at all, but in that given year, you would not make any money if that was the case, okay? And again, with these fixed index annuities, you're not taking your money out of them for a period of time, typically, okay? So that's why they're called deferred annuities. And you can structure these fixed index annuities in a lot of different ways. You can add various riders associated with them for lifetime income, death benefits, and so forth, okay? And then the final type of annuity product that could be considered a deferred annuity is what's called a variable annuity. And these type of products, they're kind of the ones that I believe gave the annuity landscape really a bad rap, because oftentimes they're very confusing, okay, and they go up and down with the market. That's why they're called variable annuities. And so essentially how they work is you purchase this variable annuity, and there's investments or underlying sub-accounts within this annuity, and they can be invested in mutual funds or ETFs or so forth, and they literally do go up and down with the market. And then typically with these variable annuities, like a fixed indexed annuity, you can add on different riders associated with that to defer income out and for a number of years, okay? Now, there are some great advantages to these annuity products, but also disadvantages. The big disadvantages to all these different annuity products is that you're tying your money up for a specific period of time, okay? That fixed index or fixed annuity that I talked about, that was a 3-year time period. So you have to keep your money there for that 3 years. If you said, hey, I want my money back in the first year, there's going to be a big surrender penalty for that. Okay, so again, annuities can play a very, very integral part of your retirement plan, but you just got to understand them. Understand how they work, how they operate, the fees associated with them, the different terms, the ways you can structure the annuity contracts. There's a lot of moving parts, but they can be very beneficial. So don't hesitate. Give the number on the screen a call if you have any questions about annuities. Are you nearing retirement or in retirement? Have you had your portfolio just looked at or have a second opinion on that portfolio recently? Centennial Wealth is a full-service advisory firm, and we have multiple locations in northern Michigan. I'm in the Gaylord office primarily. The office is right downtown Gaylord. Also up in the Petoskey office as well. That office is right off of 31. I'd love to hear your story. I'd love to sit down and chat, and it's a free, no-obligation consultation, so just call the number on the screen.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time we'll have reports that show us the percentage of assets currently in high-risk vehicles as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well.
Let's talk about the not so fun topic here, or concern of how to prepare for a recession. Now let's assume you're already retired or extremely close to retirement and a recession hits. And what should you be doing? Well, first, hopefully you have a plan in place well in advance of this, a retirement plan that maps out all this so you have confidence heading into this, so there doesn't have to be any great overall changes. There might be some tweaks along the way, but there shouldn't have to be an overwhelming change to your plan just because this happens. Because think of this. Black swan events. You ever heard people talk about that? What is that? In the investment world, it's basically the unpredictable, very rare thing that happens that typically has extreme negative consequences. So doesn't happen often, can't predict it, and hurts pretty bad when it happens. Well, these things can happen anytime. Look back in history. They actually happen more often than we think, or they're supposed to. But, you know, the 9/11, 2008, you know, COVID pandemic, stuff like this, various wars, all this sort of stuff. These are these black swan events that, looking back, people try to say they can predict, but really it's easy to after it happened, right? We can talk about that. But these are things that negatively can impact that. So you should be having conversations with your financial advisor about the investments you have, how they fit in your plan, what are the advantages, but what is the risk associated with that? How could that negatively impact you financially, and what is that downside you have? If you're taking income from your portfolio to live on in retirement, these risks are even far greater, right? You don't want to have to be drawing from a balance that's going down because of performance and start pulling it down because you need that money. So when you're building this plan out for your financial success and your retirement, hopefully you have assets set in there that maybe aren't so dependent on the market, that when a market is down, they don't feel that as much, or maybe still producing interest that you can live off of, so you can leave that money alone that maybe is negatively impacted for more longer term needs, giving it time to grow back. Again, when we look at retirement, it's not just this pot of money. It's not a 401k statement anymore. Think of it like a timeline. Hopefully you don't need all this money day one in your retirement. We probably will need that over a 20, 30, 40-year length of time. So we need to map that out over this, and there's a lot of factors that come into play with that. If you don't have a retirement plan, or you have one you don't feel confident in, give us a call. Let Centennial Wealth sit down with you and review this and walk through and help you build confidence in this plan so you can understand where your income is coming from in a recession or outside of a recession. It shouldn't matter what that looks like. Again, we'd love to sit down with you for a no cost, no obligations visit so you can plan to retire well.